Hello and welcome. Today we bring you another series we expect to list at least once at the end of every month. As you've accepted many of our series, we hope you accept this one. In this video, we bring you dividend stocks that have cut their dividend this month. In this economy, with earning coming in short and most time unfavorable, and companies cutting cost and laying off employees to tweak their balance sheet, it is only a matter of time before the high yielders in company without strong balance sheet cut their dividends. Dividend cut here and there are just inevitable in some sectors and industries. Dividends cut comes from a plethora of things, from mergers like we saw in the case of AT&T and Discovery, or margins being compressed at a company, or inflation just wreaking havoc, to just downright bad economy outlooks and forecast. Unfortunately, we all don't have a crystal ball to foresee any of these reasons for dividend cuts. These are hard times for sure. Dividend growth investors and retirees who rely on dividend income hate to hear any dividend cut because they affect our bottom line, our passive income, our drips, and snowball effect. So, since no one knows the bottom of these recession and inflation woes, we bring you this list to try and help you balance your portfolio properly so you are not overweight with too much of these cyclical stocks that may cut their dividends some more now or in the future. These are obviously not stocks you want to have too many of in your portfolio, especially if you want to live off your dividend or need to generate rising streams of dividend income over time. Please note that dividend cuts doesn't mean that these companies are doomed. Dividend cuts, suspensions, and reinstatement are normal for companies, and in most instances could be a great thing where the company can reassess its operations, cut cost where need be, learn from their mistake, and bounce back stronger. There are many companies that bounced back to good dividend payer status after cutting or suspending their dividend. Companies like Wells Fargo, BHP Group Limited, and Exelon Corporation once slashed their dividend drastically during hard times, and they've since made a good turnaround to be okay dividend payer with dividend histories. Please note that this is not a suggestion to sell or buy these stocks, but just a list to show you that a dividend cut, which we hate to hear of, have been made in these popular stocks. Disclaimer: these are all my opinions and not to be considered financial or investing advice. This video and all our videos are for entertainment purposes only. Number 2. Southern Copper Corporation, ticker symbol SCCO. Headquartered in Phoenix, Arizona, Southern Copper is a mining company and one of the largest integrated copper producers in the world. They have a market cap of $37.02 billion. Current price of $49.80. Southern Copper is down by 26.45% on the one-year chart. Southern Copper is near the 52-week low of $44.73. Southern Copper last raised their dividend to $1.25 in April 2022. Unfortunately, Southern Copper just cut their dividend by a huge 40% to 75 cents from $1.25 per share this July. Big ouch. There's no doubt Southern Copper has been pounded lately with the drop in copper price. Southern Copper balance sheet took a hit recently when copper, which is their base metal, dropped below $7,000 on recession fears. Southern Copper's current yield is now at 6.27%. For investors, that's 75 cents per share a quarter or $3 per share a year. Compared to the previous $1.25 per share a quarter or $5 per share a year. Southern Copper has a payout ratio of 81.23% according to Seeking Alpha. Other sites, however, have Southern Copper's payout ratio as high as 148%, which means that the company cannot currently cover its dividend with earnings alone, and is relying on its balance sheet to cover its dividend payments. Analysts' consensus now giving Southern Copper a reduced rating, which is a step down from previous rating of a hold from 1 and 3 months ago and 1 year ago. It's hard to see this once good performer go down like this due to the recession fears and plunge in base metal. I plan to hold on to the few shares I have and see how it all plays out. We noticed you still having liked, subscribed, or turned on the notification bell. Please kindly encourage us if you've gotten some value from this presentation. Your like and subscribe will help us know that you like content like this. Please join our community and be a part of our growth here on Wealth Listicles. Thank you. Now let's move on. Number 1. Rio Tinto Group, ticker symbol RIO. This is another big player in the materials sector. Founded in 1873 and headquartered in London, UK, Rio Tinto Group engages in exploring, mining, and processing mineral resources worldwide. The company offers aluminum, copper, diamonds, gold, borates, titanium dioxide, salt, iron ore, and lithium. They have a market cap of $98.86 billion. Current price of $61.03. Rio Tinto is down by 29.09% on the one-year chart. Rio Tinto is near the 52-week low of $53.91. Rio Tinto last raised their dividend to $4.17 per share semi-annually in March 2022. Unfortunately, Rio Tinto just cut their dividend by a huge 29% to $2.67 from $4.17 per share semi-annually this July. There's no doubt Rio Tinto has been pounded lately like other materials dividend stocks. Rio Tinto balance sheet took a hit recently due to weaker iron ore prices, higher operation cost, and labor shortages. Rio Tinto's current yield is now at 8.92%. For investors, that's $2.67 per share semi-annually or $5.34 per share a year. Compared to the previous $4.17 per share semi-annually or $8.34 per share a year. Rio Tinto has a payout ratio of 74%. Analysts' consensus maintains a hold rating like it has done in the last 1 month, 3 months, and 1 year ago. So for a quick recap on the list of stocks that just cut their dividend. We gave you Rio Tinto Group as number 1. And then gave you Southern Copper Corporation as number 2. So which one of these stocks do you own? Comment below and let us learn from you. Remember, all we do is bring you the lists for entertainment. It is your duty to do your own due diligence and/or consult an expert and invest your hard-earned money wisely. Please don't leave us without smashing the like button and give us a subscribe. Think of it as a tip for my hard work. I will greatly appreciate it. Thanks for watching, and I'll see you in the next one. Disclaimer: please note that I showcase these stocks for educational purposes only and shouldn't be taken as investment advice. I don't personally own all these stocks, just some. Please do your own due diligence and/or consult your expert investment advisor, as more fundamental analysis may be needed before investing. Please also note that the past performance of these stocks does not guarantee or indicate similar future performance. And please excuse all errors and omissions.